Did you know that nearly 90% of short-term investors lose money? That's right. What seems like a quick win often turns into a costly mistake. Why is short-term investing a terrible idea? I'm about to share with you what I think. Welcome back to Simply Money. Short-term investing is tempting. The promise of fast profits can be hard to resist. But is it really worth the risk? Today, we're diving into why so many people fail at short-term investing and what you should do instead. The allure of short-term investing is clear. Quick results, adrenaline-filled trades, and the chance to capitalize on market trends. But here's the reality. Volatility makes prices unpredictable. High transaction costs eat into your returns. And perhaps the biggest issue, emotional decision-making often leads to buying high and selling low. And that is why 90% of people who trade short-term lose money. It's so easy to sit back and hear people on videos, on YouTube, on TikTok saying, oh, you can get this program and it'll show you how to pick stocks for day trading. 90% of them lose money. The only people typically making money are those selling the products on how to make money. Now, I'm not saying nobody makes money because there's 10% who do. And you can take that chance if you want that you'll be one of the 10% that figure it out or, more likely, get lucky. Or you can follow the tried and true method of building wealth because these challenges combine to make short-term success incredibly difficult. Why does short-term investing so often end in one, you get markets are unpredictable? Daily price movements are influenced by news, speculation, and global events, making it nearly impossible to time perfectly. You build wealth not by timing it, but by spending time in it. Long term is how you build the wealth. The markets are just too unpredictable. Another reason why people lose money in short-term investing is lack of analysis time. I talk about it all the time on this channel. Don't take my word for it. Don't take somebody else's word for it. Don't even take your financial advisor's word for any investment. It's your money. You should be doing your own homework, learning, and doing some basic analysis on what it is you're buying. And short-term strategies rarely allow enough time for research to uncover solid opportunities. You have to buy and sell like that, and you don't have time to analyze, is it a solid opportunity? Thus, 90% of people who do short-term investing lose money. Plus, you have trading fees, taxes, and the stress adding up, hurting both your returns and your financial mindset. Because of the stress and because of the losses, your mindset begins to turn that you can't make money in the stock market at all. And that's not the case. It's not meant for short-term investors. I always tell people, if you're talking about day trading versus investing, there's two differences. Day trading to me is speculating, and in a sense is gambling. You're gambling that you're going to time it right. Where investing is you are putting money into companies for the long term to help them build their profits, their research, their goals. You're providing them assets, cash, to help build their company because you believe in their product, you believe in their foundations, you believe in their methodologies, you believe in their vision, whatever it is, you are bought into a company. When I buy into an ETF that holds Apple, Microsoft, Home Depot, Walmart, McDonald's, Coca-Cola, those types of companies have proven to me long-term they are around and they're going to grow. They may have high growth periods, they may have downturns, but long-term they are stable companies. And with ETFs and index funds, the good thing is you get some up-and-coming new things in there that can help accelerate growth. And if something's falling off the wayside, you even have established companies that drop out. I remember things like Sears, Kodak, those types of companies drop out of being reliable. And so those get replaced by some of the new and upcoming ones. That's why I don't buy single stocks. One, because I don't want to spend time constantly reanalyzing all the foundational metrics of a company. I don't want to look at their financial sheets weekly or quarterly, whatever the case might be, to make sure they're still performing and still moving in the direction I want them to. So ETFs allow me to do that on a much less frequent basis because their structure is set where they replace the companies based on these standards that I've already studied and looked at and said, I agree, that's a good plan. In long term, the analysis is much easier. Here's the big insight. History shows that long-term investing wins. Data proves that holding investments for years, not weeks, dramatically increases your chances of success. Did a video, you can look at long-term from 6 months up to 10 years, 20 years on what percentage of loss you can expect versus what percentage of return you can expect by staying in the market. The longer you stay in, the returns become more stable instead of highs and lows early on. 10 years on, the returns become pretty stable and the risk of losing money to zero. That's right. After 10 years, the odds of losing money in the stock market becomes almost zero if you're diversified. Don't take this to mean you can go buy a stock and it won't lose money. But if you have, say, the S&P 500, top 500 companies in the United States, and in 10 years, you've lost all your money, guess what? We're in big trouble. That means the 500 biggest companies in the United States have gone belly up. You're not going to lose all your money. In fact, after 10 years, the odds are you won't have lost any money. Your odds have gone to where you will have made money. There's very slim odds. There's been very few 10-year periods where you would have broke even or lost money in the stock market. And if you stretch that out, if you're younger and you can go further, that becomes non-existent. Markets might dip in the short term, but over time, they tend to grow. Investors like Warren Buffett didn't build wealth with quick trades. He focused on long-term stability and compounding growth. And that's why I don't use short-term investing models. I believe in buy and hold for the long term. Short-term investing might sound exciting, but the risks far outweigh the rewards for most people. Long-term strategies provide better returns, less stress, and a path to real financial health. If you go to a casino, you better go in with money say you take $1,000, you go to a casino, you better go in saying, I am willing and able to lose this money. You need to look at it as entertainment. I'm having fun. I'm out with the boys. I'm out with the girls. I'm out having a good time. This $1,000, I'm not going to be bringing it home. If you win, great. But if you lose, it was entertainment. Day trading, if you're going to do it, you better go into it with the same mindset. Here's $1,000 I'm going to day trade with. I plan on losing it. I'm going to use this for fun, for education, whatever the case might be. I don't do either because I don't like giving my money away. I work too hard for it, and I've worked too hard at investing it to make it just go away. Now, I'll spend money on things other people won't. I'm not saying don't go to casinos, don't day trade. I'm saying you better be prepared to spend the money and lose it and not need that money. If you want to take a small little percentage and play around, even with single stocks, go for it. Even for long term, if you want to buy a single stock, I'm not telling you not to. I'm just saying do your due diligence and be prepared and don't put all your eggs in one basket. Short-term investing, as exciting as it sounds, the long-term strategies provide a better return, less stress, and a path to real financial health. What are your thoughts on day trading? Have you ever tried day trading? If you have, share with the community below. How were your results? Maybe you're one of the 10% that did great. Share with us. I'm not using that as a promotion for you to try to get people to buy a product or anything, but if you've had success, let us know. Congratulations, by the way. But if you've had lack of success, you're one of the 90%, share that as well. Share your warnings with other people. Because we're here as a community to try to encourage others to reach financial freedom. We're not here for ourselves. We're here to help the community and individuals reach their financial goals. And so if you've found something helpful, share it with them. If you like this video, hit the like and subscribe button, and we'll see you next time on Simply Money.